When the volatility of the stock market shot up to its record high since the financial crisis of 2008, is commodities investment still a good choice? Here with me is senior commodities trader Chris Craddock. Chris, could you tell us how did the stock market plunge had an impact on the stock market in the last couple of weeks?
Well, you brought up a good point. You know, everybody was looking at 2008 a couple of weeks ago as kind of like the precursor to what might happen now. And everybody remembers in 2008 when the stock market took a plunge, everything took a plunge. And I think you might see something reminiscent of that now if we keep having the acceleration in stocks. But one major difference, that is gold and silver won't respond the same way. The primary reason for that is you have all these problems in banks in Europe and all these problems with banks over here. Gold and silver is being seen as another way to put on the bank's balance sheet as artificial currency. So other than that, I really think if there really is a risk-off trade like everybody's talking about, you will see everybody just getting out of everything.
If clients would like to invest in commodities at the moment, what would you recommend?
It's kind of difficult to say per one particular client, but I would probably recommend to keep your eye on gold, keep your eye on silver, anything in precious metals. Any way you can find a way to invest into precious metals, probably the best place to be in this environment. Going long term, the commodities still is in an inflationary trend. It still is in a long-term bull trend. So you probably want to find strategic areas that you can get involved in commodities when it starts taking a nosedive, which it will.
How do you compare the risks of investment in commodities versus the stock market or equities?
That's a very good question. You know, commodities traditionally are inherently risky. If you look at in terms of a risk pattern over the past like 20, 30 years, they have the same risk profile as, let's say, like investing in equities. But, you know, most people do not invest in commodities the way they do in equities. They put way too much capital in equities and not enough money in commodities. So when there's a problem, they lose a tremendous amount of money. So I would probably say if you're going to get involved in commodities, you should find ways that you can do it where it's a low exposure to what you're getting involved in. Because most people just do not have the complete understanding of how fast commodities can move. And if you're getting involved on a leverage basis, it moves even faster. I mean, we're looking at gold today moving up 20 bucks, and that would equate to $2,000 move. But look at silver, that moved $1. That's a $5,000 move. And if you're on the wrong side of that trade, I mean, the margin on that is probably like $12,000. You're going to have a margin call faster you can spell your name. So most people are not ready for that kind of risk.
When the volatility of the stock market is so high right now, what do you think we'll see in the commodities market in the near future?
I kind of see the commodities in the near future as a whole losing steam because of the fact that if there is an economic slowdown, if there is a real problem with banks, if we're going to have another Lehman Brothers but in Europe, everybody would want to do nothing but get into treasuries and to a lesser extent, gold and silver.
Thank you very much for joining me here.